What currency is this? Sorry about this. I was really thirsty. No, guys. This is not euros. This is not euros, right? So euro looks like this, right? Euro looks like this, somewhat like this, right? But this is pound sterling. This is pound sterling, right? This is pound sterling. I'm sure you must have seen it a lot in your Cambridge exams, Cambridge textbooks, because obviously it's a UK curriculum and they have pounds and so on, right? Okay, so this is pound. Think about this. Great Britain, yeah. Okay. Okay, think about this. So students, dollar per pound. Who will tell me what this statement on the y-axis represent? This shows how many dollars. And one more thing before I forget, every day at the start of the class, please, one of you need to remind me that I need to start the recording because I've switched from another platform where the recording used to happen automatically. I'm not used to this. So please remind me for every class, right? Because we don't want to miss recording our class, right? Which I did in the previous class today, right? Okay, now let's keep moving. Okay. Yes. Yeah, this is exchange rate. This is exchange rate above. So this is exchange rate. Have a look at this. So things will become more clear a bit. So dollar per pound on the y-axis, it shows that how many dollars you will be able to buy with each pound, right? So you will have, as I said, excellent, right? So I said that the second currency will be on the x-axis. So it will be the quantity of pounds that will be on the x-axis. Quantity of pounds on the x-axis. Students, are you getting me? So you will have dollar per pound on the y-axis and you will have quantity of pounds on the x-axis, right? Now, what we will draw on this graph is basically, this is always the same, Liba, it's always the same. So on the y-axis, you have the exchange rate, Liba, listen to this. On the y-axis, you have the exchange rate. So this is the exchange rate. How so? I'll show you in a bit, right? And on the x-axis, you have the quantity of pounds. You have the quantity of pounds. Are you getting me? Right? Is it making sense? Is this making sense? Right? Just give me a second. Just a second. Okay, now let's look at this one more time. Students, have a look at this. So exchange rate, right? Exchange rate is basically the value of one currency in terms of another, right? So what we have on the y-axis is dollar per pound. Dollar per pound means that how many dollars will you get? How many dollars will you get against each pound? Against each pound, how many dollars will you get? That is what the variable on the y-axis is showing you, right? And what do we have on the x-axis? On the x-axis, we have the quantity for the second currency. On the x-axis, we have the quantity for the second currency, which is pounds in this case. Right, Laiba, that's correct, right? So whichever quantity is coming in the second place on the y-axis, that is the currency that we will have on the x-axis, right? So since it was dollar per pound, if instead of this, it would have been, let's say, dollar per euro, right? So how many dollars can you buy with each euro that you have, right? So this is the sign for the euro, right? Then you would have had euros on the x-axis. Then you would have had euros on the x-axis. How many of you getting this? So if someone is unmute, may I request you to mute yourself, right? Okay, are we clear on this? Is everyone good? Okay. So think about this, students. So this is something that we have done in the yesterday's class. So it should be easy, but still, if there is any confusion, feel free to ask me, right? So you will have, since it's the quantity of euros, you'll draw the demand and supply for euros. So downward sloping will be the demand for any currencies, just like any other normal demand curve. And upward sloping will be the supply of the currency, just like any other normal supply curve, right? Are you getting? So where the demand and supply for the currency intersect. Now, a lot of you might be thinking that, oh, what is demand for currency? What is supply for currency? How is that determined? We'll talk about it, right? We'll talk about all of this in a bit, right? But for now, you just need to focus on what is happening on the graph. So where the demand for euros intersect with the supply for euros, that is where your exchange rate will be. That is where your exchange rate will be. So let's say this turns out to be $2 per euro. This means that each euro buys you $2, $2 US. Will these lines touch? These can. Abdul, that's a good question. So if you're saying that your question is whether the demand and supply lines intersect or touch the y-axis? Yes, they can. They can, totally they can. Right? Are you getting me? Right? Does it make sense? Okay, now think about this. Moving forward, students, this is the main point. So this is the equilibrium point. And what is this showing us? This equilibrium point shows us the exchange rate. And that is the main thing that we are interested in. We are interested in knowing the value of euros and dollars, right? So it has shown you over here that each euro gets you $2, right? Are you getting me? Now comes in the main part. Now comes in the main part. Now we'll move forward from here and we'll talk about that what factors determine the demand for a currency, and similarly what factors determine the supply for a currency, right? Now let's look at one more graph like this, because I think that there might still be a little bit of confusion and some of you might be confused. How is this, how we have come up with this graph. So if anyone of you is confused, let's look at this. Look at one more example and then move forward from here. Okay, so students, now look at this. Let's say we are interested in comparing a lot of Pakistani students, and I'm sure this is true for India as well, right? A lot of Pakistani students go to UK every year for their studies and all that stuff, right? Now, what happens, right? So let's look at those students are interested in knowing the exchange rate between rupees and pounds. So if you're going to study in UK, then you need to know the exchange rate between rupees and pounds, because obviously you will be paying your fee, what your parents gave you or whatever money you have saved will be in rupees, but the fee that you pay to a British university would be in pounds, obviously, right? So you want to know how many pounds can you buy with each Pakistani rupee, right? Easy, simple. Okay, so pound per rupee. And as we said that the second currency on the y-axis is the one that we record on the x-axis. So it will be quantity of rupees on the x-axis. It will be quantity of rupees on the x-axis, right? Now, what do I need to add on this graph is the demand for rupees and the supply for rupees, right? So normal downward sloping will be the demand for rupees, normal upward sloping will be the supply for rupees. When the demand and supply for rupees intersect, that is your exchange rate. Now have a look at this. So since the exchange rate right now, the last time I checked, it might have changed since then. But if 1 pound used to buy approximately 229 rupees, right? So 1 pound used to buy, right, few days back, 229 rupees. So what you have to do, 198. Oh, wow, that's quite an improvement, right? Okay, but let's say it's 198. So let's change it to 198. Great. Okay, now what we will write over here, what value will we write over here? Can anyone quickly do the calculation? So if 1 pound buys you 198 rupees, this means that with 1 rupee, you will be able to buy how much? 1 divided by 198. So with 1 rupee, you will only be able to buy 0.005 pounds. With 1 rupee, you will only be able to buy 0.005 pounds. Is this making sense? How many of you are understanding this? Very good, Ruhail, that's correct. Right, right. Easy? Okay, euros, pounds, whatever, right? Yeah, that is what I was surprised at, how come Pakistani rupee has all of a sudden become so strong against pounds. But you are getting my point, right? Whatever, right? So this means that each rupee is buying you how much? 0.005 pounds or euros or whatever that is, right? Okay, now can we move on from here? Laiba, is this clear, right? Okay, now moving forward from here, we will talk about what we were discussing yesterday, that what factors affect the demand for currency and what factors affect the supply for currency, right? Because at the end of the day, the exchange rates are based on the demand and supply for currency. Now, first thing that we need to understand, great. So the first thing that we need to understand that just like any other commodity, just like any other product in the market, currency is also a product. Currency is also a product. In fact, you would know that a lot of people hold foreign currencies and they invest their money in foreign currencies, right? You might have heard about it. People buy forex trading, that is known as foreign exchange trading, right? So they hold dollars or they hold another currency that they think is very strong and that will increase in value in the future just to make money on their savings and to invest in that, right? So this is one way of making money, right? So just like any other product or commodity, there is demand for that currency and then there's supply for that currency. Now, who determines the demand for the good and who determines the supply for the good? That is very important. Now, I want you to pay close attention because after this lecture, you will be absolutely clear on how exchange rates are determined, right? Now think about this. In the entire world, we'll come to that. I believe we'll come to that, right? In the entire world, who holds Pakistani rupees? In the entire world, right? Who holds Pakistani currency? Right? Right? In fact, I should have shown you on the graph, but okay, I'll do it in a bit. Right? All countries? No, but who are the people who primarily hold rupees? Are you getting me? So the thing is that technically all countries can hold it. So let me ask you another straightforward question. So right now in your bank account, right now in your wallet, it's the Indian rupee. And that is what you will hold because you live in a country and you hold that country. No. I get it, right? So reserve banks of countries might hold it, right? But the thing is that the country to which a currency belongs, that country, its citizens and its central bank, obviously that central bank is responsible for printing that currency. So that is the primary institution that holds and prints and makes that currency, right? So what I'm trying to say over here, that in the entire world, who is supplying rupees? What is the primary source of rupees in the world, right? So let's talk about a specific currency because that will better help you understand what we are looking at, right? So supply for rupees is coming from Pakistan. So if we talk about Pakistani rupees, supply of rupees will be coming from Pakistan. If we talk about Indian rupees, so supply of rupees will be coming from India. Indians hold that currency, and similarly in case of Pakistan, Pakistanis hold that currency. So that is what you need to, right? Central bank of that currency prints the currency, exactly, right? Students, are you getting hold of this? Is this making sense to you, right? So supply for Pakistani rupees is coming from the Central Bank of Pakistan, right? Similarly, we'll come to the demand side in a bit. Don't worry about that. But the supply is determined by Pakistani State Bank and Pakistani nationals who hold that currency. Pakistani Central Bank, and right, Pakistanis who supply that currency. How many of you are clear on this? How many of you are clear on this? This is making sense, right? So we are the ones who supply rupees to the entire world, right? And similarly, who supplies US dollars in the world? Obviously Americans, right? The Federal Reserve of America, which, prints US dollars and so on, right? Clear? Okay, very good. Now, who demands rupees? Now, this is where the thing becomes a little tricky. Who demands rupees, Pakistani rupees in the world? Now, this is interesting. Who supplies rupees? We are clear. Pakistanis, because they hold the currency, and the Central Bank of Pakistan, right? Because that institution prints this currency. We know this, right? But who demands rupees in the world? Who demands Pakistani rupees? Who can tell me? Who demands Pakistani rupees? Am I, as a Pakistani, demand? Right. Foreigners, Laiba? Exactly. So I was afraid that some of you would say Pakistanis. No, but we don't demand rupees. We already have it. Right? We don't demand. Otherwise, you can say we are demanding it. I mean, everyone wants more money, but you are not getting what the underlying idea is. That the underlying idea is that you already, whatever income you earn as a Pakistani, whatever amount your parents give you, right? That is obviously the same currency that you use in the country, right? That will be rupees. But demanding means anyone outside the country who would want to convert their currency into rupees, right? Any foreigner, right? So when other countries import from Pakistan, they have to make the payment in Pakistani rupees, right? Exactly. So if a tourist is coming, now this once you are clear on this will make more sense to you, right? So if you assume that a tourist is coming to Pakistan, now whatever country they're coming from, they will have that country's currency, right? But they can't buy goods and services in Pakistan. At some point, they would need to convert their currency into rupees. So what they do is that they go to a bank or they go to a money exchange and they give their local currency and they ask the bank to give them rupees because that is the country they are traveling to, right? So let me give you another example. So when I was going from the masters, and what a lot of students and every student does, international students, when they're going to another country to study, what they do, they go to a bank, they give their local currency. So I gave rupees and I exchanged my rupees against dollars. So in that case, I was demanding dollars because I don't have dollars. I didn't have dollars. Okay, if banks don't have enough cash, then we will demand. No, Bob, I did not get your question. Currency can be exchanged at airports. Yeah, on exchange, on airports and, foreign exchange, companies and so on, which there are a couple on the airports and so on. I doubt we have one. We do have one. Right. Okay. So, Arbab, I did not get your question. If banks don't have enough cash, then we demand. No, think about this. There would never be a time, think about Arbab, there would never be a time when a bank would run out of, currency. Is that what you're saying? I'm still very confused on the comment that you made. No. They will not. They will not, right? Think about this. How should I put it, right? So the central bank, the State Bank of Pakistan has all the foreign currencies, or at least all, in fact, all the foreign currencies, right? So, and they make that foreign currencies available to commercial banks. Commercial banks are the normal banks that you must have seen here and there everywhere, right? The normal private banks in any country, right? So we as a customer, we go to a commercial bank and they have a separate exchange, foreign exchange reserve or counter, whatever, right? We go there, we give them our currency, and in exchange, we can buy whatever currency we want. Singaporean dollars, Australian dollars, I don't know, Bangladeshi taka, whatever it is, we can do that. Most of the times when I go to ATM, they don't have cash. Okay, that's a different story altogether. But that has nothing to do with foreign exchange. When you go to ATM, they are out of cash. That is only because of mismanagement. That's not because we are short of cash in the world. Oh, sorry, short of cash in our country. That's not because of that. It's because it is due to mismanagement that the ATM, whatever bank that ATM belongs to, did not fill the cash in. It's because of their fault, right? Are you getting me? So that's a different story altogether. And when you are talking about this thing, ATM and cash and money, we'll talk more about this topic in A2 when we talk about the money market. When you talk about the money market, that is where we talk about all these things, right? The local currency, who prints it, how is that circulated, how do we get the money that we have in our wallets and all that stuff, right? So that we'll talk about then, but that is due to mismanagement of the banks that the ATM is running out of cash. Otherwise, it should not. It should not. Okay. Now, who demands rupees? Are you guys clear on this, right? So rupees is demanded by foreigners who want to make a transaction with Pakistan, right? I never held dollars, right? But when I was going to study in USA, there I had dollars. That's why I converted my currency into dollars. Foreigners who need to make a transaction with another country, with your country or whatever, right? Foreigners who need to make a transaction with Pakistan. Is everyone clear on this? Foreigners who need to make a transaction with Pakistan. Easy? Is this simple? Right? Similarly, when any country is importing anything from Pakistan, they will make their payment in Pakistani rupees. Then at that moment, they will demand rupees. At that moment, they will demand rupees. Is everyone absolutely clear on what do I mean over here? Right? Now we'll move on and we'll look at all the factors that affect the demand for the currency, and similarly, we'll move forward and then we'll discuss all the factors that affect the supply for currency. Right? Is this making sense? So far, everything is good, or is there any confusion that you want to ask me? Right? Okay. Now, what factors affect? Let me choose a different color here. So what factors affect the demand for currency and what factors affect the supply for currency? That is what we are about to discuss. Now let's keep it general. But feel free to look from your country's perspective, because that will make things, again, I'm written rupees, sorry about that. So that will make your life easier, right? Because, right? So supply of currency, think of your currency, whatever country you belong to, and similarly, demand for currency, right? Demand for your currency, whatever currency you use in your country, demand for currency. Okay, now think about this. Every time, I've already said, every time a foreigner comes to Pakistan, right? So why does, right, we'll come to it. Laiba, you are moving a little fast over here, right? We'll come to that why currency appreciates and depreciates once we are clear on how the demand thing works, how the demand for the currency and the supply for currency, changes. Only after that we will be able to determine the appreciation and the depreciation, which is the very next part after this. But before that, you need to know all the factors that affect the demand for currency and all the factors that affect supply for currency. Okay, now demand for currency. Think about this. When foreigners are coming to visit Pakistan, do they need rupees? Do they demand rupees? Am I making sense? So every time you would go to visit UK, or every time you go to visit any other country in the world, don't you demand their currency? You do demand their currency, because the hotel over there, the restaurants over there, the shops over there will charge you in the local currency. So you are demanding their currency, right? So if tourists are coming to your country, they will demand your currency. Tourists coming to your country, right? Okay, what else? What if coming to your country? What if there are investors, foreign investors, who are investing in your country? Would they need your local currency or not? Yesterday, we talked about China investing in Pakistan, the CPEC project and all that stuff. There, we said that yes, Chinese companies will need rupees, because when they go and they hire Pakistani labor, right, they have to pay in rupees, right? So Pakistani labor will charge you in rupees, whatever the rate is, right? Are you getting me? So when a foreign investor is investing in Pakistan, that is when they demand foreign direct investment. So when foreign direct investment comes to your country, if you're familiar with the term already, but that is great. Even if you're not, that simply means foreign direct investment, that some other country is investing in your country. Foreign direct investment, right? So let's say a US business is opening up in Pakistan, or let's say British companies opening up in Pakistan, and vice versa and so on. Right? So foreign direct investment. So when foreign direct investment comes to your country, the demand for your currency will increase. What else? When you export, what about the exports? When you export, right, the demand for your currency will increase, because those countries are buying your products, so they will pay you in your currency, whatever currency you use. How many of you are clear on this? This is making sense. This is making sense, right? Okay, now this being said, why are the, okay, so we need to talk about this. Abdul, I don't know if you were here in the class yesterday or not. What is foreign direct investment? Okay, so Rohil, foreign direct investment is simply any investment that is coming outside Pakistan. So if I'm a Pakistani national, if I decide to invest in Pakistan, I open any production plant, I open sugar mill, or I open textile mill, that would not be foreign direct investment, because that is not made by a foreigner. That's not made by a foreigner. But when a foreign company, foreign investor invest in Pakistan, that is foreign direct investment. Well, did I answer your question? Now, coming back to your question, Abdul Rahim. So you said, why is the investment of CPEC quoted in dollars? Why is the investment of CPEC quoted in dollars? So the simple answer for that is that dollar is a global currency, in the sense that dollar is, US economy is the largest economy in the world. Dollars is one of the most commonly used currencies for trading and so on and so forth. So why is that important? To get a better idea of how much was the investment, right? So let me put it in more simpler words. If US invested in India, right, certain amount, and if US invested in Pakistan, a certain amount, and then you want to compare, how would you compare? So if you show the investment that US made in India in Indian rupee, and then you show the US made investment in Pakistani rupee, then it would be difficult. You would still need to convert it in one currency. So the easiest and simplest way is to just record it in dollars, as simple as that. That is to record in dollars, right? So when you look at dollars, it would be easier. So let's say in India, if they invested, let's say $20 billion, and in Pakistan, they invested $10 billion, or whatever that amount would be, it would be easier to compare that where they invested more, where they invested less, blah, blah, blah. Right, Abdul, did I answer your question? So that's why even CPEC, China doesn't use dollars, Pakistan doesn't use dollars, but the amount quoted in newspapers and all these, publications, you see dollars being quoted, because it's easier to get an idea. Even the startups that get money, Indian startup or Pakistani startup or whatever startup in the world, when they get investment from overseas investor, that is always quoted in dollars, because that makes comparison easier. So what is the value? What is the net worth of an Indian company? What is the net worth of a Pakistani company? It's easier to compare when it's in the same currency. That's why. Okay, can we move on, students? Okay, now for the supply part, I want you to tell me the factors that affect the supply. what are the factors that affect the supply of currency, right? So if you just need to reverse all these factors that I've written on the left hand side. So when you reverse these factors, you'll get the things on the right hand side, right? So if Pakistani tourists are going abroad, right? Exactly. Pakistani going to foreign countries for tourism, right? Right? So that would increase the supply. Why would that increase? Now, let's also understand the underlying mechanism for that. And let me give you a little more explanation on that. So imports, exactly, very good, Preet. That's absolutely correct, right? So when you import something from another country, so what you are doing, you're providing, and I did give you an example that what happens at the background when a Pakistani national is importing anything from an Amazon. So we are paying in rupees, but that money eventually gets converted into dollars. So we are supplying rupees and that is being converted into dollars, right? Is this making sense? Is this simple? Right? Right. Laiba, to what did you say? To what did you say that supply will decrease? To what did you say the supply will decrease? Right. Just give me a second. Just give me a second. I'll be back real quick. Right. Just give me a second. Sorry about that. Just give me a second. Okay. Can you guys hear me? Can you guys hear me? Right. So, Laiba, stay with us, and I'll answer your question. Foreign direct investment by Pakistanis, exactly. Now, when Pakistanis are investing in another current country, then they are supplying their currency, which is rupees. So the supply for rupees will increase. Right, I'll answer that. Abdul, let me answer that in detail. Just give me a minute, right? So imports and Pakistanis investing abroad. Pakistanis investing abroad. Right? How many of you are clear on this? Investing, Pakistanis investing abroad, right? So students, have a look at this. So the thing is that these are all the factors that on the left hand side we have listed the factors that affect the demand for currency. On the right hand side we have listed the factors that affect supply for currency. And what you can see over here, you must have noticed that the two factors are opposite to each other. So if any foreign tourist is coming to Pakistan, that will increase the demand for rupees. And when a Pakistani national is going to another country for tourism, that will increase the supply for rupees. Now comes in what the question of Abdul Rahim was. Now, Laiba, I want you to pay close attention. Now, I want you to pay close attention, because if you're still confused, if you're still confused with how supply or demand will increase, based on the discussion that we just had, then this is the chance for you to understand, right? And now I'll be explaining everything simple and easy, and I'm pretty sure that you will be able to understand. Now, please pay close attention to what is happening. So think about this. Abdul, imagine a student who is going from Pakistan to another country. Everyone, right? So what's the example that we are taking over here? A student is going from Pakistan to another country for study, right? Now, what you do, right? So it's not always the case that you convert your currency from your home country. You can also get it converted when you go over there, right? I repeat myself. When you go to that foreign country, you can also get it converted then. But sometimes you feel more comfortable to carry that currency along, right? So think about this. My first day in USA, right? The first day I land in the USA, I need some money to buy myself food, right? So I would not be in USA looking for, bank which can convert my currency into their currency, right? So how about we stay safe? How about we play safe? And before even boarding on a plane that is taking to you another country, you go to a bank, convert your currency into a foreign currency. How about that? Isn't that more sensible thing to do? Isn't that more sensible, right? Now think about this. So this guy goes to bank. His name is Mr. A. So Mr. A is going to study to another country, let's say UK, right? And what he would do is that he would pay the rupees that he has in his pocket or in his bank account or in cash form or whatever the, whatever the form is. But what would that do? The bank would convert that currency, which is dollars or rupees, into pounds, right? Because which country he's traveling to? He's traveling to UK, so obviously he needs pounds, right? So the currency that you gave, now listen to this very carefully, the currency that you gave to the bank, this is the currency you are supplying in the market. This is the currency you're supplying in the market. How many of you are getting me over here? Read, and everyone else, right? So, Abdul, this is the currency you're supplying. Now, previously it was lying in our pockets. Previously, your rupees were lying in your bank account. You were not supplying it to the foreign exchange market. Now you're supplying it. So the supply for this currency would increase. Whichever currency you gave to the bank, the supply of that currency would increase, and whichever currency you exchanged for that, whichever currency you bought for against the currency that you gave, the demand for that currency would increase. So in this simple case, it is the supply of rupees that's going up because that is the currency you're supplying to the bank, and the demand for pounds is going up because that's the currency that you demanded from the bank. Right. Is my voice low? Is my voice low? And Bob, can you also check your volume, right? But I have increased my volume from my end. Okay, great, perfect, perfect. Right, students, are you clear on this? One more example, and then we'll move forward, right? So how about we take another example? So let's say a tourist is going from USA to India, right? So a tourist is going from USA to India, right? Now, what would that tourist need? That tourist would need, that American tourist would need to convert his currency, his or her currency, into the country that they're traveling to, which is India, right? Now, they will go to bank, right? So let's say US is on the left-hand side and India is on the right-hand side. Is everyone getting this, right? Now, this guy goes to a bank, provides the currency that he or she has in his or her pocket, whatever bank account, whatever it is, right? And then in exchange for that, get the currency that they want to hold, because in that country that they're traveling to would use Indian dollars, right? Now, which currencies demand increased in this case and which currencies supply increased in this case? Quickly, will you tell me this and then move forward from there? Which currencies demand increased and which currencies supply increased? Right, dollar supply will increase, exactly, and Indian rupee demand will increase, as simple as that. So the currency that you provided, that country's supply would increase, right? Yes, exactly. So here's the supply going up for dollars, and here's the demand going up for rupees, Indian rupees, right? Easy. Is it clear? Any confusion so far? Anything that's not clear? Anything you want to ask me? Right? You good on this? Okay, now comes in the part where the appreciation and depreciation thing will become very clear. Very good, Live. Good to know you are clear on this. Okay, perfect. Now think about the students. Now, very simple. I'll make a simple graph in front of you. I'll give you a hypothetical example, and you have to tell me what will happen in that case, right? Now, let's choose currencies that we have not normally talked about. Okay, now you have to first of all make the normal exchange rate graph, which you are already very familiar with. So on the y-axis, you have, what do you have on the y-axis? Exchange rate, right? So let's say now we're comparing between dollars and pounds. Let's do it like this. So dollars per pound, right? Dollar per pound. And on the x-axis, I said that the second currency will come on the x-axis. So it will be quantity of pounds. It will be quantity of pounds. Okay. Now downward sloping will be the demand for pounds, and upward sloping will be the supply for pounds. Is everyone clear on this? So let's say this was your original equilibrium in the market. So the original equilibrium in the exchange rate market between dollars and pounds was that one pound used to buy, let's say, $2. I don't know exactly what the exchange rate is, but let's say this is what it was previously, right? So this was your exchange rate previously. Each pound is buying you $2, right? Easy, simple, easy. Okay. Now let's think of an example. USA, now I'm writing the statement and you have to interpret it. USA is importing more from UK. Now is the main challenge. US is importing more from UK. How will that be shown on this graph? US is importing more from UK. How would we show this change on this graph that you can see on the graph? Right, meeting is ending. Price of GDP. No, you have to tell me. Preet, you have to tell me. I'll send you a new link. Don't worry about it. You need to tell me how would we show it on the graph. Supply of dollars will increase. Abdul Rahman, Rahim, yes, that's correct. How many of you understood what Abdul Rahim said? Okay, or let me quickly send you the link. Let me quickly send you the link.